Jamie Dimon has just issued a serious warning that the US may experience an interest rate spike. The reason why this is very serious is because of two reasons. First, Jamie Dimon, love him or hate him, is one of the smartest guys when it comes to finance, world finance. He runs one of the largest banks in the world, the largest one in America, and he is privy and has access to information that really only the Federal Reserve and couple other central banks in the world have access to. And so these warnings need to be taken serious. Now, people like Jamie use the word might because they always leave the room open to change. But this is exactly what I've been warning about for the last year and a half. And the reason why is because, and it's already happening, it's already unfolding, there are less people willing to loan the US government money, which means bond rates will drive higher. Now, I've also explained that the Federal Reserve will be more than likely doing a head fake and dropping rates just a little, but they will have little to no effect on the real bond market. It will just provide a little bit of hopium for voters before they go to the polls. However, the data is coming in so strong that may not even happen because it would be so obvious of what the Federal Reserve is going to do. So as I read this story, I want you to think, what would happen to all of your investments if interest rates doubled from here? Whether it be stocks, bonds, gold, Bitcoin, what would happen if the 10-year bond went from 4% to 8%? I know it sounds hard to believe, yet there have been many times in history where this has happened, but I also want to remind you of one thing. The Fed funds rate was at 0 2 years ago. It's at 5 now. Here we go. This is out of Wall Street Journal. Jamie Dimon warns the U.S. might face interest rate spike. Says Chief Executive Officer of JP Morgan Chase, Jamie Dimon warned the U.S. interest rates could soar to 8% or more in coming years, reflecting the risk that record high deficit spending and geopolitical stress will complicate the fight against inflation. He said huge fiscal spending, the trillions needed each year for the green economy, the rematerialization of the world, and the restructuring of global trade, all are inflationary, Dimon wrote in an annual letter to JP Morgan Chase shareholders released on Monday. Dimon, head of the nation's largest bank, acknowledged in his 61-page letter that the U.S. economy has remained resilient despite abundant skepticism by forecasters, including him, because he has been a pretty big skeptic of the U.S. economy and saying, how long can this last? But he also warned that a fractious global backdrop, including wars in Ukraine and the Middle East, could amplify economic stresses. Now, once again, he's sounding a cautious note. Dimon said such an outcome, which implies that inflation quickly returns to the Fed's 2% target from higher levels now, is less likely than subdued bond yields and record stock indexes would seem to imply. Meaning the Fed is not, has not, and may not be able to, in the near term, get inflation under control. He says these markets seem to be pricing in a 70% to 80% chance of a soft landing. Now, again, he's talking about the markets pricing it in. Dimon wrote, I believe that the odds are a lot lower than that. Dimon's outlook on the economy has been cautious for years. He warned in 2022 that a hurricane was about to hit the U.S. economy as interest rates were rising. Let me explain the mentality of someone like Jamie Dimon, because I am one of those people that have always seen things way ahead of time. It's not because they aren't happening. It's because the things that cause crashes in economics to happen, when they're happening in real time and they get worse and worse and worse, it does take time for it to flow through. But an intelligent person that understands how economies have crashed in the past When the same things start happening in the current realm, the current time zone, you start going, oh, hey, things aren't good. It's getting bad. Get ready. It's going to crash. And the naysayers are always laughing. You've got people like Dave Ramsey that does not care about your money, cares about his. That's why he will never acknowledge that the nation suffered a decline in home prices across the nation in '08. He completely denies it because that doesn't sell his products he wants to sell you. Just like he will never admit of all the things he said, but we've got the video clips before the dot-com bust as well. As long as you're buying stocks and using his mutual funds, you're going to make money over the long term. What he does not explain to you, he's too busy bragging about his super fancy college degree. I don't got one of those. What he's telling you is the reason why the stock market is higher today than it is a long time ago, or home prices are higher today than they were a long time ago, is because of inflation, which is a hidden tax. If you would take a look at how much your father made in the early 80s or your grandfather made in the 60s, and then compare that to the average price of a home, you will find that people working today, starting a family and buying a home, actually make less money to buy that home. I know it sounds crazy because you go, but the house prices went up and wages have went up, but they have not went up at the same rate as to what they were in the early 80s and the 60s. Okay? Everyone's got a story. I mean, put it down below. What price did your parents pay? You'll hear all kinds of wild numbers. My parents paid 100 grand. My parents paid 30 grand. My parents paid 60 grand, depending on how old the person is, talking about their parents. Well, now if you ask them, okay, well, how much do they make per year? You will find that it's staggering. You're like, wait a minute. You made in 1 year, some people made back in the 80s, early 80s, in the 70s, in the 60s. In 1 year, they would make how much their entire house cost. I know it sounds crazy, but it's really the truth. Back then, there were 10-year mortgages or even shorter. Now you have 30, 40, and soon to come 50-year mortgages, okay? See, this is what happens when people are called alarmist. It's because they're actually quite intelligent because they've done so much studying about history and what causes an economic crash, that they see them happening, those same things, because every cycle repeats itself, they see them happening today. And so they're saying, hey, everything's bad. So Jamie Dimon is one of the smartest dudes on earth when it comes to finance and cycles. And he has been actively warning for the last 2 years. Now check this out. He's leaving. Most people don't realize why. This is the perfect exit point for him. So JP Morgan's already starting to look for a successor for Jamie Dimon. I want to remind you, Jamie Dimon, for the first time, is starting to sell his stock at all-time highs, right? Many people would laugh at him. Those are mockers. They're fools. I'm going to do a video later today that's going to come out about gold and the true reality of wealthy people in this nation and how much they own. And it's going to blow your mind because it's not going to be what you expect. So as you hear warnings about this interest rate spike that's coming, and I want to remind you, last August, Jerome Powell himself said, we may not have to raise interest rates at all again. Why? He said, because the bond market is doing our job for us. What is happening is there are some sophisticated and intelligent traders out there that are saying, you know what? I'm watching my bond portfolio, my held to maturity portfolio, go down in value because rates are going up. And I'm seeing horrible fiscal decisions on the part of the government and by corporations at a rapid pace. You know what? I don't want to loan money into this environment at the current rates. I'm going to price in risk. So I'm going to demand a higher rate. I'm going to wait until those rates come to me. So the bond market is moving opposite of what the Fed's doing. Think about this. The Fed hasn't raised rates in how many months? It's been a while, right? Yet we see the 10-year marching up. Why? Because the traders are finally figuring out, oh my gosh, the Fed did not do enough in time to quell inflation. Growth is happening. Some wild, rampant speculation is happening. So the bond prices are going up. Think about the squeeze on, on the consumer. Here, I got to show you a photo. This is going to be part of the gold story, but I got to show you this because I walked into the nation's largest Rolex dealer about a year and a half ago. Almost bet money the gentleman I talked to is watching this video right now as we speak, because it's a little side story. I walk in and there's no windows in this place, and it's Bob's Watches down in Burbank, and I'm greeted with a gentleman with a gun. I complimented on his firearm, which he probably thought I was super weird, but whatever. I'm an enthusiast. And I said, hey, he goes, what do you want? I'm like, I'm here to buy a watch. He goes, do you have an appointment? I said, I don't have an appointment. I'm not that fancy. So he gets somebody. I walk in and there's no watches. I'm like, what the heck? I sit down and they go, what can we do for you? My son's with me. Talk about an embarrassing dad moment. And I say, well, I'm here to buy your cheapest Rolex, knowing that it was probably going to cost like $2 or $3 grand. And I'm like, I want to see it. And they just, and you could hear sighs and, oh gosh, what a loser. And there's fancy people and there's some Lamborghinis out in the parking lot and a G-Wagon I could give a crap about. And he goes and grabs one and he goes, why, I must ask, why are you trying to buy the cheapest Rolex? Like they're thinking I'm trying to, I'm like, well, I'm going to buy it. And then I have the receipt and I'm going to report on how the Rolex indicator is about to crash and turn over. And everyone starts chuckling, right? Thinking I'm a complete idiot. And and I'm going to report it and I'm going to write it off because it's going to be a tool, and then I'll sell it as an asset on the company and blah, blah, blah. It's a tax thing. But my point being is it's a $2,000 watch, right? I go, I'm going to be able to, with rock solid evidence, be able to come back into this same store, which is the largest reseller of Rolexes in the nation, and go, look, I paid $2 grand. Now I could go back to the same store and buy the same watch for $1,800. Evidence, right? He goes, sir, Rolexes do not go down in value. And I go, it's like talking to the Lamborghini dealer. And I said, let me ask you a question, but I'm pretty sure I know the answer. How long have you been selling Rolexes? I know we're on an interest rate video, everyone, but this really has to do with interest rates, okay? And he goes, I've been doing this since 2012. I'm like, so you've never seen a downturn. If you were here in 2005, we'd be talking a different story. He leans over, and rather than insult me, you'll never guess what he asked me. He leans over, he looks around, my son's right there, and he goes, do you know who the BRICS nations are? And I start laughing. I'm like, well, yes, I do. And we start having a totally different level of conversation. So right now, this is the Rolex Submariner index, and it prices the price of a Rolex, you know, the thing that nobody says goes down. So you'll see as interest rates dropped and ultra low monetary policy, but it flattened out right here. And this is very, very important to realize. I know it's going to sound crazy, but right here in the photo, that is 2019 to 2020. And remember, if you've been watching me for a long time, type 1 or tell me how long you've been watching me. If you've been watching for a long time, I tell you, the economy started to crash in 2019. That's when the banking industry was collapsing. Interbank lending rate spiked to 12.5%, which is twice, 100% worse than the week of 9/11 and when Lehman Brothers crashed. 2019 was a bad year, and the government needed something. Governments around the world were freaking out. This was a worldwide thing. So you'll see the Rolex sort of stalled right there because the consumer was hurting. Most people don't even remember back that far, right? So now it's just seen from the year 2016, up, yeah, up, and look at what's happening right when the ninja called it. Now, who really gives a crap about this, right? Because you weren't there. I wish I would have recorded it, but the guy with the gun probably wouldn't have liked that. And then you look on a percentage basis, you look at this chart, look at the bar chart. Gain, little gain, big gain, little gain, negative. All right. So Jamie Dimon sees things like this. He's got a Rolex. I don't have one, but I didn't buy one that day. Just embarrassed my son. But once you start to put the pieces together and you see all of these things as one thing, please understand this, you start to see where the nation's going. This is why it was easy for me to say, hey, real estate's crashing. It's going to start crashing in this state. Why don't you all get ready? I'll show you how to get ready for it. And now we have, check this out. And this is what's crazy because nobody believes this. Let me just show it to you one more time. Nobody believes this. House prices are crashing. So here's the chart. This is a chart that goes back to 1970, right? And over term, you know, if you listen to Dave Ramsey, you're like, look, homes are a great investment, but a lot of people lost their jobs and their money there. They lost a lot of money there. They lost a lot of money there. That was a big one. That's called the Great Recession. Then look at that date right there. Well, that's around 2019. That's just weird. 2019, that's before the pandemic. See, very few people understand the crash of 2018, 2019, which was based off of, please understand this, interest rates. The Fed started raising rates way back in 2015. All right. So now this is where we are. Okay, on a percentage basis, get ready for this. On a percentage basis, we're almost at nationwide home price drop to the entire Great Recession. And you know what the cool thing is? We haven't even begun yet. We've only just begun. Hold on. To crash. I don't care what people think. Everything's going crashing down. Dave Ramsey is such a clown. Sorry, guys. I had to help. I couldn't help myself. So here's the thing. All of this, the Rolex indicator, art, Lambos. I'm going to have a Lamborghini one of these days. I'm going to buy a Huracan. I heard they're built amazingly. I'm going to have one of them. I'm going to have a GT40. I'm going to have all that stuff. I'm waiting. And this is going to disappoint a lot of people. The Ninja actually has been successful in the past. I'm waiting for the proper time to pounce. So is Jamie Dimon. So he's selling his stock. He's like, I'm going to exit stage left. Just like Warren Buffett's doing, just like weird Jeff Bezos. I don't run Amazon anymore. I'm just buying houses and trying to store cash in a way because I'm getting ready for crash. And so this interest rate spike is going to happen. It's going to absolutely devastate the nation. It's going to be horrible. It's actually going to be scary. I've seen it. It's very scary. I'm going to be honest with you, get very emotional over it back in 2014 when I saw this stuff coming ahead of time. But here's the thing. At a certain point, I had to turn my life around and go, no, screw it. Let's go crush it. And I didn't have a whole lot of hope until I hit record on YouTube for the first time. I think exactly 4 years. I think it's my 4-year anniversary. YouTube will tell me like today or like in a week. And then I'm like, let's just wake up the nation. Let's wake up the nations. Let's find all the meek and humble people that can have a vision for something much bigger. I don't care all these fake millionaires running around, paper millionaires with Lamborghinis tell you they're wrong. We're just going to buy their Lambos. Hashtag, we haven't done this in a long time. If you understand what I'm talking about, and it's much more than materialistic stuff and buying things, right? But just hashtag, we're going to buy your stuff. Or I'm going to buy your stuff. Because we're doing the opposite. And then when good-hearted people, you and I, take that, and we're already trying to be givers into this world, right? Tithing and helping people. Well, think about what happens when all of a sudden you got millions of bucks in the bank. Think about that. That's the true power of this thing. That's the true message. And when Jamie Dimon gives you a warning like this, you should heed the warning, regardless of how you feel about the guy. Because you want to know what Jamie Dimon cares more about than helping you? So please understand this. And type 2, if you agree and understand, I'm going to know because there's no type 2s until the end of this video. He cares about being right. That's all. People in positions of power understand something very important. At the end of the day, the most important thing is that they are right. Because then the masses will follow them into the next cycle. You'll see soon, there's a reason why I made my videos a special way. And we catalog them. On this day I said this, on this day I said this. Only good-hearted, amazing human beings would ever listen to a dork in a car with a crazy haircut. And it was done on purpose. Because when you have the ability to look past somebody's looks, look back past somebody's situation in life, and seek the truth, you're going to find it. And then you're going to be blessed because of it. Type 3 if you agree and understand that. The Economic Ninja is out.